Hey guys, what's up? In this video I want to talk about trading. In past few videos I talk about many patterns and strategies, how to trade, and like wedge, trading range, triangle, head and shoulders, I don't know, support resistance areas, climax, a lot, many different bars like reversal, pullback, flag pattern, and many stuff we talked about and we assessed. But in this video I want to talk about maybe most important thing in financial markets. Actually, it's hard to say what is the most important thing, but if you consider, if you say that okay, you're the greatest trader in the world, if you be the best badass trader in the world but don't have risk management, and you're screwed. The institutions, the biggest institutions and hedge funds, they have a lot of crews and staff. Some of them they trade, some of them they do risk management stuff, some of them they do analysis. So we need all of this part, but the problem is, as a personal trader, we don't have an institution, most of us, so we have to take care of these things ourselves. You know, we have to analyze charts, we have to educate ourselves, we have to do risk management and financial affairs. All of this is our responsibility. So we have to understand this shit. Okay, I want to start with something they call trader's equation. Trade equation. Not that good at writing. Okay, trade equation says you have to determine what percentage of your trades are profitable and win. We call them win trades, and how many of your trades are loss. So how we realize that? It's not that hard. For example, if you have 10 trades, if you did 10 trades, and in these 10 trades you had, let's say, 4 wins and 6 loss. If I ask you, does this trader, does this shit profitable or not? You know, we have net loss or net profit, and considering this figures, 4 win versus 6 loss, are we profitable here or not? You might say, okay, it's 6 versus 4, so obviously we had loss. Not basically. It depends on how many risk and how many rewards you consider. first of all, I have to say, generally, best winning rate and normal winning rate is something around 40 to 60 or 70%, 40 to 70. It means that even if you have the best trading strategy ever, if you're a professional trader, normally your winning rate is a number is 40 to 60%, something like that. Yeah, sometimes big institutions, they have winning rate more than this number, but usually your winning rate is something like that, something like this. It means, for example, if you do 10 trades, 4 of them are winning trades and 6 of them, the rest of them are just loss. But how we can make money with this situation and condition? Who can make money? How on earth you can make money? Okay, let me put it this way. For example, if you have a R to R ratio 2, R to R ratio is if your R to R ratio or your risk to reward ratio is 2, is number 2. Even if you just win 40% of trades, you're gonna make profit. How is that? Okay, let's say you had 10 trades, and in these 10 trades 4 of them were profitable and 6 of them were loss. 4 win and 6 loss. Okay, how much pip or points you got? Let's say change this color. If we assume that you took 4 pips in each trade, pips as your take profit, and in your TP is 4 pip and your stop loss is 2 pip. Why is that? It's obvious, because your risk to reward ratio is 2. Let me show it this way. For example, enter the position at this price, and this is your stop loss, and your risk to reward ratio is 2. It means okay, if you risk 100 pips, you wanna take 200 reward. Means you enter this position for 200 pips reward, and you risk half of this amount, half of this number, which is 100. So if if price hits your target, you make 200 pips, and if it hits your stop loss, you don't lose 200, you just lose half of this number, which is 100. So when we win, we take 4 pips, reward. But when we lose, we just lose 2 pips. And if you do the math, you can conclude that your net and your total trade is profitable. And if you multiply these numbers, you can conclude that you eventually, after all, you made 4 pips profit, because you had totally 12 pips loss, but you had 16 pips profit, which gives you 4 pips net profit. If I show this with red, yeah, makes sense. So we call this trading equation, and that's really important. You have to assess this one. So when you want to trade, if you trade on demo or real account, you have to examine, and you have to check this out. And yeah, okay, so I think I made it clear and illustrated very well. Let's talk about other stuff. You know, in trading, we basically have some variables to assess and evaluate our performance, and basically there are 3 or 2. Generally we have reward. When you wanna enter a position, you have to consider the reward, the amount of reward you wanna make, your expectation, and consequently risk, how much risk you take. And if you put this 2 variables in a fraction, it gives you a ratio, which we call it risk to reward ratio. And this way you realize that does this trade worth it, and does this reward worth the risk or not? Does this risk worth the reward? I don't know. Does this considering the risk of this trade, are you still interested in taking this position or not? And it should be somewhere around, should be greater or equal to 1 or 2. Shouldn't be less than 1 or 2. 1 is the lowest and smallest number you want to consider as a risk to reward ratio. So this we can call this 2 as the 1 variable, and the second variable is probability. What is that? You see the probability that how much probability is there for this trade. If you enter a position, how much how probable is that to hit your target? Okay, is it I don't know, 70%? Is it 50%? how much chance is there for having for taking profit. Okay, we call this probability, and basically you have a high probability when you enter the position, when you have a higher risk, in order to have a reliable and legit and trade, and in order to be confident about the trade you take, you have to sometimes, most of the time you have to take big risk. For example, if you consider this level as a support and you say, okay, I want to enter this position after a breakout below this level. Okay, if you enter the position at this price and put your stop loss above this, it's kind of like a head and shoulder. But if you put your stop loss above this top and you wanna take profit at this level, let's say you wanna take profit twice your risk. Okay, you have a 2 risk to reward ratio. You have your risk to reward ratio is 2, and but if you lower your entry point, just to make sure that okay, this is definitely a breakout and it's not just a fake breakout. Sometimes it happens a lot of times that you see a breakout, but after that it gets back into that trading range, and it turned out that this breakout was fake, and you shouldn't enter that position. And if you're not in front of the chart, if you're not at chart, it will hit your stop loss and you stop out the position with loss. But if you enter the position in lower price, reduce your reward and increase your risk, you worsen your risk to reward ratio. It was 2, but now it's less than 1, which sucks. But you make you're more confident about your profit, and you're more confident that this trade might be a winning trade. So that's it. If you want to have a good high probability, you have to sacrifice your risk to reward ratio. If you want to have a good risk to reward ratio, you have to lower your probability. Okay, I hope you enjoyed this video, and I'm sure you learned a lot of information. In this video we talked about risk to reward, trading equation, and trading variables. They are so important. I will talk about them in the next videos. And you have to practice, you have to consider this shit when you are trading. It's not just about analyzing and finding patterns, and yeah, they are important, but if you can't manage your financial affairs, you fucked. That's it. Okay, it's enough for this video, and goodbye.